afternoon, everybody. Thank you so much for joining us today. It is a pleasure to host you, and we hope that you enjoy this exciting yet educational webinar today about self-directed IRA. So hosting us today is Joe Berko. Joe Berko is the CEO and co-founder of Astor Realty Capital. Over the course of Joe's 25-year career, he has raised, syndicated, sold, and acquired over $3 billion of commercial real estate deals. So on that note, Joe, I will pass it over to you.
Thank you, Laura. And thank you, everyone, for joining us this evening. I think the topic that we're going to be discussing is it's important, right? It's not just what you make, it's also what you are able to retain. And to that end, I think that Tony Unkel and his company, are essentially going to be there to help you with the retaining part. And while we're good at putting things together and making everyone money, I think that the preservation of capital, which is obviously at the very high forefront of what we do, being able to retain as much as of it is extremely important. A little bit about myself and Astor. I have been in the real estate syndication advisory for the last 26 years. Astor Realty Capital essentially started about 6 years ago as a vessel, if you will, as a vehicle to allow our friends and family to participate in high quality real estate investments with small capital. Again, small is always sort of like an average of some sort, considering that as syndication of capital and as private equity, we are always looking out for markets that are changing, for opportunities that are out there, and the information that's available for us and the transparency that we bring and the experience that we bring is what's available to you. So without further ado, I'd like to have Tony take over and express to you his experience and everything that has to do with the IRA.
Thank you, Joe. Hello, everybody. Thank you for joining us. My name is Tony Unkel. I am a business development manager for the Northeast for the Entrust group. I've been with Entrust for about 5 years, and we assist our clients in making alternative investments with their retirement accounts. And throughout the presentation, we'll be able to go a little deeper into how to use your self-directed IRA to make private placements investments, whether that's with Astor Capital and real estate or any of the private placements or alternative assets that are out there. I just have to read a quick disclaimer. Well, unfortunately, we do have to do this every time we speak. The Entrust Group does not provide any investment advice, nor do we endorse any products. All information and materials are strictly for educational purposes. All parties are always encouraged to consult with their attorneys, accountants, financial advisors before entering into any type of investment. A little bit about Entrust. We are a self-directed IRA administrator, record keeper, and custodian. We are in our 41st year of business now with 22,000 plus IRAs, a little over $4 billion in investor assets under management. And something that sets Entrust apart from all of our competitors is we do offer you one single point of contact. That's important in our space. No call centers, no 800 numbers. If you are an Entrust client, you have a designated Entrust contact. As I mentioned, I am in the Northeast. I cover from North Carolina, Maine, out to Michigan. We have a gentleman in the Pacific Northwest, a gentleman in the Southwest, and Mindy is in the Southeast. And there's 4 of us that covers the entire country. So depending on where you are, you will always have a designated rep to help you with everything you need. Entrust, we are the premier provider of self-directed retirement plans. We have fully knowledgeable staff. Mostly all of us have the CISP designation, which is a certified IRA service professional. We have nationwide offices. We offer a national continuing education program. We do national and local in-person and online events and webinars. And we are the only administrator in the space that offers an IRA academy. At that IRA Academy, we do invite all individuals in the IRA space, as well as certified financial planners, CPAs, investment sponsors, where we train, educate, and prepare individuals for the CISP designation. It's not only for Entrust employees and folks in that profession, but our competitors do send their employees to our school as well. So we do like to say that we are the leader in the education in the space. Now get into the fun stuff. What is a self-directed IRA? It's either a traditional or Roth IRA in which you use your retirement funds to invest in alternative assets. Self-directed IRAs are regulated by the Internal Revenue Code. We offer administration and custody of investments. We do not offer or sell any investments. Self-directed IRAs do allow for greater asset diversification with many opportunities beyond your traditional stocks, bonds, and mutual funds. With self-directed IRAs, since we are not advisors, due diligence is the account holder's responsibility. Some of the benefits of self-direction: you get to take control. You make your own investment choices. You do what you wish. You invest in what you know in. You can invest in many types of assets. And of course, the tax savings. Contributions may be tax deductible, tax deferred, or tax-free growth. In traditional IRAs, your growth is tax deferred. You will be taxed at the time of distribution. In a Roth IRA, all your future growth is tax-free. Many different plan types that we offer. Your basic traditional and Roth IRAs. We offer a SEP IRA, which is Simplified Employee Pension Plan, a Savings Incentive Match Plan, which is a simple IRA, individual 401k, also known as a solo 401k, and we provide health savings accounts and educational savings accounts as well. So you can use any of these accounts to invest in alternative assets. What can you invest in? It's pretty much anything. Anything from real estate, private lending, startups, LLCs, precious metals, notes. Literally, your options are limitless. It's easier to talk about what you cannot invest in. There are 5 restrictions: collectibles, liquor, artwork, and coins, life insurance policies, or S corporations. So if you just look at this list here, if it's not on this list, you could use your self-directed IRA to make an investment. IRS does restrict who you can invest with or who you can buy and sell your investments from. They're called disqualified persons, and that's you and your lineal family. You and your spouse, your parents, grandparents, children, or grandchildren, or any fiduciary that has control over your IRA, whether it's an accountant, an attorney, or an advisor. What is a prohibitive transaction? Prohibitive transaction is basically the same way as saying, what could I do to get myself in trouble with my investment? So it's any improper use of the IRA or plan by you, the participant, or a disqualified person is considered a prohibitive transaction. Some examples: borrowing money from a disqualified person, selling a property to a disqualified person, using the IRA as security for a loan, buying a property for personal use with an IRA or plan funds. This is important. A lot of people think that they can do this with their IRAs. If you use your IRA to purchase a physical property, you cannot personally use it. It's called self-dealing. It's a prohibitive transaction. You will lose the tax-exempt status of your retirement plan, and you will be taking a full distribution of that property. Investing in a company owned by a disqualified person. What are some acceptable transactions? Partnering with yourself on a new deal, partnering with your cousin, partnering with your spouse. Now, you can partner with your spouse, but on the prior slide, we said your spouse was disqualified to your IRA. IRS allows you to partner with a disqualified person being your spouse one time, and that has to be done at the beginning of the transaction. Another example of acceptable transaction: leasing the property to siblings, brothers, sisters, stepbrothers, stepsisters, all acceptable. Due diligence, very important. Responsibility of the account holder. Beware of promises of high returns. These are some things just to investigate. Look into the background of the broker or the company and their principles. Ask for copies of written materials. Research the risks and how you might liquidate your private placement securities. Research the return policy. Review the private placement memorandum, also known as the PPM. And always consult with your financial or legal advisor or CPA before entering into any transaction. Do your due diligence. It's very, very important. How do you get started with us? It's very simple. Open an IRA, fund your account, whether that's a contribution, transfer, or rollover. Contribution is money out of your personal pocket, deposited into your IRA. There are contribution limits. Transfers are moving money from an existing IRA, one that's at a brokerage firm. You would sell your stocks, bonds, mutual funds, and do a cash transfer over to your self-directed IRA. Or a rollover. A rollover can come from a 401k, profit sharing plan, defined benefit plan, any company sponsored retirement plan that's from a prior employer. You can roll over into your newly formed self-directed IRA. If you're still employed, you can always ask your employer if your plan allows for what's called an in-service rollover. With an in-service rollover, that plan, while employed, may allow you to roll a portion of those funds into an IRA. Once your account's funded, you can purchase your asset.
Thank you so much for that. And I did just want to mention to our participants who have joined us today, please feel free. This is a Zoom and a conversation for you guys. We want to give you the opportunity to be able to ask Tony some questions. So please feel free to drop them into the chat, or if you would like to chat with Tony live, there is a raise hand feature. You can do that and I will unmute your microphone for you to have a chat directly with Tony. So based on that note, Tony, I do have a couple of questions dropped already that I would like to address with you, if that is okay. So
Absolutely.
Wonderful. So are investors partnering their IRAs with other funding sources?
Yes, absolutely. Of course, it all comes down to what they're investing in. You can partner with pretty much anyone and anything. If you want to take real estate as an example, if you're looking into an apartment complex and you want to do the full purchase price with your IRA, not many people have that kind of money in a retirement account to buy an entire complex. So they are partnering with other IRAs. They are partnering with friends and family. They can do this through an LLC, which is also known as a checkbook IRA. You're theoretically creating your own syndicate, inviting other investors in, and then making one massive purchase. If you're buying a property directly and you don't have the purchase price, you can always take out financing, and I believe we'll cover that in a little bit.
Fantastic. That is a great answer to that question. Thank you, Tony. I have another question here from one of the participants. If my IRA invests in a property, can I stay in it as well?
Absolutely not. And that's probably the most important thing to take down when using an IRA to invest. It's a clear-cut prohibitive transaction under self-dealing. You may think you can because it's a property and it's not what you're used to investing in with retirement, but you have to treat your properties just like you would treat a stock. If you own stock in a brokerage account, you sell it, cash out, and you move the money out, you're taxed and penalized depending on your age. So staying in that property will be considered a prohibited transaction. You will be forced, if you're caught, you will be forced to distribute your retirement account, and you take that full tax burden and the penalty if you're not at retirement age. So we strongly suggest you never stay or interact with your properties that you own. And to elaborate a little more, not only stay, you're not allowed to provide any sweat equity to that property. So if it's a fix and flip, you can't do the work for you, and a non-disqualified person cannot do that work either. Everything has to be contracted out. Keep yourself an arm's length distance and pay with the IRA.
Fantastic. I personally am finding this very, very interesting. This is stuff that, and I'm sure our audience is as well. This is something that I would not have been aware of, and to obviously learn about these other ways and these other opportunities to invest, into real estate opportunities. I think that is very, very valuable. Tony, I have a question here. What happens to income and expenses?
Sure. So income is ROI, it's return on your investment, depending on how the investment's structured. If the IRA is buying it directly and it's a rental property, or if it's a fix and flip and you sell it and you earn, that money is deposited back into your IRA. That's not personal income. It is retirement income. It's not taxed until you take a distribution. And if it's a Roth, you're never taxed on it. As far as expenses are concerned, property taxes, utility bills, HOA fees, upgrades, all have to be paid out of the IRA. So it's an IRA-owned property. All money coming and going belongs to the IRA. With an LLC and checkbook control, with a checkbook IRA that we touched on earlier, your IRA funds an LLC, the LLC goes out and buys the property. Your income is paid to that LLC, that income stays in the LLC, and you can use that for your bills, repairs, upgrades, or utilities. If you need anything, the LLC will write the check.
Wonderful. That's a fantastic answer. Thank you for clarifying that, Tony. Can we partner an IRA with personal funds? Is there any possibility there?
Yes, you can partner your IRA with personal funds. Two scenarios, and I'll always keep going back to the LLC. LLC is probably the cleanest and easiest way to partner with yourself. Downfall is you're responsible for the record keeping and dollars in, dollars out. A nice clean example is you buy a property for $100,000, $50,000 from the IRA, $50,000 from you personally. With the LLC, LLC is worth $100,000. You go out, the LLC buys the property. Now, say it's a Roth IRA. Your tenant pays you $1,000 a month. $500 is tax-free to the Roth. $500 is taxable income to the individual. That's the member of the LLC. If you don't have the LLC and the IRA buys it directly, on the deed, it will say custodian for the benefit of individual 50% owner of the property. And then your individual name is the other 50%. Your tenants will write two checks, $500 paid to your IRA, $500 paid to you personally. Your personal income is taxed. Expenses paid based on percentage of ownership. So yes, you can definitely partner with yourself. It's a little more record keeping on your part if you have the LLC. If the IRA buys it directly, that's our responsibility to make sure all the funds are allocated properly.
Wonderful. Thank you so much, Tony. I hope that answered that question to one of our attendees. And we actually have one of our participants would like to speak with you. So Irv, I'm going to allow you to talk. You should be able to unmute yourself and ask Tony your question.
How long does it take to do this rollover?
Excuse me?
How long does it take to do the rollover or the transfer?
How long does it take to do the rollover? It takes 10 minutes to create your IRA online. And then the rollover process is really not up to Entrust or any custodian. That time frame comes down to you and who has your money. So if we're talking rollover coming out of a prior 401k, you have to contact that provider of the 401k. They will mail you a check. You receive the check, turn around, you mail it to Entrust. We'll deposit that check into your IRA. Once that check is received and deposited, there is a 7 business day hold on it. That's the only time frame that can be controlled. So you have to take into account the prior custodian processing your request and transit time. Typically, we see about 3 to 4 weeks before that money is available to fund, with 2.5 of the weeks being the United States Postal Service. If it's a transfer, IRA to IRA, cash is wired 3 to 5 days. Clear cut, easy to do.
Okay, thank you.
You're welcome.
Thank you, Irv. Thank you for joining us. So I have, and just a friendly reminder to anyone else, please feel free to use the raise hand feature. This Zoom is set up for you guys. We would love for you to take the opportunity to have a chat with Tony whilst we have him here. So please use that feature and you can personally address your questions with Tony. But I have another question here from Elena, who is in the audience. She asks, can she partner her IRA with other investments?
Can you elaborate on that?
Can my IRA partner with others in investments?
With others in an investment? Absolutely.
Yes.
Sure. Mm-hmm.
Okay, fantastic. Is there
Depends,
anything?
I mean, if you want to elaborate what type of investment you're speaking of, if it's the home that we already covered, then absolutely. You can have your IRA partner with multiple individuals as long as they're not disqualified persons. You have to touch that disqualified person rule, the one time only. But you can partner with friends, absolutely. Whether it's their IRAs or cash, not a problem.
Wonderful. Elena, please let us know if you would like to elaborate on that question anymore. But thank you, Tony. Thank you so much for doing that. I actually has somebody else raised their hand? I don't believe so. But I've got one more question dropped in here for now. Again, we are coming up to the end of our questions. So again, if anybody else would like to address anything, please raise your hand or drop something in the comments. But, and this would be more related to a fix and a flip. If my IRA invests in a property, can I continue to work on it?
No. No
Okay.
sweat equity.
No sweat equity?
Yes, the IRS considers that sweat equity. So you're in there, you're fixing, you're sheetrocking, you're putting the roof on, you're doing the work. Maybe you're not doing it physically. Maybe you have a renovation company or you're a general contractor. You cannot earn or benefit personally from an IRA investment or any disqualified person.
Okay, wonderful. And thank you so much, Tony. Actually, on that note, I'm loving all the questions, guys. I'm glad that you're taking this opportunity to, to get these questions answered. So I have a question from Renan. Can you roll over from profit sharing plan?
Absolutely, yes. If it's profit sharing plan from a prior employer, no questions asked. Yes, you could 1000% do it. If you're currently employed, you would have to check with your plan administrator. You go to your HR department and ask if you're allowed for what's called an in-service distribution, also known as an in-service rollover. If they say yes, you can do it. If the answer is no, then you have to wait until you're either retired or you separate from the company.
Wonderful. Thank you, Tony. Renan, I hope that answered your question well. I'm sure that it did. And I have another question from David. What are the setup fees? Can you talk to us a little bit about your fees?
Sure. Fees are available to the public on our website at theentrustgroup.com. On the top corner, just click the button fees. You'll be able to download our fee schedule. I'm happy to discuss them. Generally speaking, it does depend on how many investments you have, how much money you have in the IRA, depending what options you choose. But broadly, it's $50 to create an IRA. All wires are $30, checks are $10, and we have an annual fee of $299 per asset. Buy one house, it's $299. You buy two homes, $299 times two. But I'm happy you guys can download the fee schedule off our website, or I'm happy to send it to the folks at Astor after our call and they can send it out to the list. That's perfectly fine with me.
Yes, that is absolutely what we will be doing, guys. We will be, after the Zoom, sharing Tony's information. We would love for you to get in touch with him and, discuss the possibility of, utilizing this service for yourself. So on that note, there is no more questions in the chat. If, I will give everybody a final opportunity to raise your hand or drop a question or two into the Q&A. And whilst I do that, I will put Tony's information on the screen. Bear with me. We have Tony's information there. Okay, so Tony, thank you so much for your time. It's been an absolute pleasure. I myself personally have found this very, very valuable. I'm sure that our participants who have joined us and many our existing investors have as well. Tony, thank you so much. And
thank you very much for having me.
It's been a truly pleasure.
Thank you. And for the audience, if anything comes up, here's my contact. Feel free to shoot me an email, give me a phone call. I'm happy to discuss anything you have.
Wonderful. Thanks again, Tony, and everyone. Thank you for joining us. We appreciate it on this Wednesday evening. We hope that you found it educational and informative, and we've tried to keep it short and sweet. Unfortunately, Joe has had to drop out last minute. He was having some technical issues, but he thanks you again on the behalf of the team of Astor for joining, and we will be in touch. Thank you, everyone. Have a blessed evening.
Take care.